All right, hey there, it's Josh with Standard Insurance. In this little short video, I found actually a nice article talk about long-term care indemnity versus reimbursement versus cash indemnity. And this actually article makes it fairly simple. Long-term care is a big expense for a lot of retirees out there that can drain a lot of portfolios. But let's first look at reimbursement here. Reimbursement long-term care policies. Reimbursement long-term health insurance policies pay for the actual daily or monthly cost of care. For example, if your selected daily benefit is 100 and the actual cost of care you receive is 90, your long-term care insurance policy will pay 90. Any excess daily benefit remains for your future care needs. If your care costs 120 daily, you receive 100 per day and you must pay the excess amount. Potential advantage of this type of payout is that your benefits can last for a longer period of time if your actual cost of care is less than your daily benefit. In other words, the 3-year plan referenced above, well, we won't get into that. But that's reimbursement. Now let's scroll down. There we go. Let's scroll down to indemnity. Indemnity long-term care policies pay your selected daily benefit as soon as you qualify for benefits. You receive this amount regardless of the actual cost of care. For example, during early stage of home care, a person may incur a lower cost of care due to more limited needs. Or care costs could be lower because their spouse is providing some care. A reimbursement plan pays the actual cost of care, while the indemnity plan pays the maximum daily or monthly benefit. Indemnity plans even allow you to put money in the bank. The advantage of an indemnity plan, long-term care plan, is the potential to receive more money each month than you incur in your expenses. Obviously, this is the plan that you want. Now, most of the companies, there's a few of them that have that. There's a few of them that have that, indemnity. This is the one if you can get, because think about it, you're going to be elderly, you're not going to remember what's going on. Unfortunately, there's dementia, there's Alzheimer's, Parkinson's, there's a lot of, unfortunately, there's a lot of bad things that happen, obviously, as you get older. But with an indemnity plan, again, as far as the record keeping, not as strict as the reimbursement. Okay? But different carriers, there are out there, not a lot of them. And that's why you got to shop the market and so forth. But again, just going to be a little history on the long-term care market. Back in the early 90s, with the baby boomer boom, these insurance companies just did not price long-term care the right way. They were, and you think, oh, insurance companies never lose. They lost big time. A lot of them exited the market. There's only probably 12 to 15 carriers, the big carriers, you know, Mutual of Omaha, Northwestern Mutual, Mass Mutual, New York Life, big carriers to offer long-term care. They were too aggressive. They didn't weight their long-term care. Underwriters didn't price it accordingly. And let's look at the third one right here, cash benefit. Computer's a little glitchy this morning here. Cash benefit, long-term care health insurance policies pay a cash benefit irregardless of your actual expenses. This allows you to use the payment for anything or anyone. Caregiver can even be a family member, even anywhere in the world. That's a little difference between an indemnity policy and a cash benefit policy when receiving care in an expensive long-term care facility. Yet there could be a big difference between a cash benefit and a reimbursement policy when receiving care at home, because the cash benefit will pay for anyone or anything. Now, these are very tough to find. Very tough to find. These are tough to find, indemnity, cash benefit, LTC policies, and you're going to pay. Obviously, you're going to pay for a premium if they have that written into the contract. And that's the fiduciary responsibility. That's a responsibility I have as far as, you know, finding out a carrier and so forth. And that's why I keep a stable of 20, 25 different carriers. Now, obviously, not all of them I go to. And for long-term care, I whittle it down to about 3 to 5 that I like to go to. But there's 3 to 5, and then depending on, you know, your situation, how much underwriting, your health situation, because then we get into underwriting as far as long-term care. Some are more stringent. There's always underwriting, obviously. Insurance companies just not going to take anybody. but depending on how stringent their underwriting and what benefit goes along with that, we'll take a look at. So that gives you an idea here. So to recap here, reimbursement, only actual LTC costs, long-term care costs are reimbursed. Bills and receipts must be submitted to determine reimbursement amount. Okay, indemnity, full monthly LTC benefit paid to owner. Some insurers do not require monthly proof of billed services, some do. The licensed provider must be used to meet minimum standards of the physician's plan of care. Excess benefits not needed for care can be used for any purpose. Again, indemnity, there's a few out there. And actually, I have one carrier that's an indemnification carrier. And the cash indemnity, tough to get. So, that being said, more information, go to my blog, part of annuityohio.com, and I'll put some show notes here, description here below the video as well. But Standing Insurance right here downtown Bucyrus, but go to annuityohio.com. And because of long-term care, there's a couple different ways to do that. You can get a life insurance policy with LTC, long-term care benefits. You can get an annuity with long-term care benefits attached to it, and then you can get a standalone long-term care as well attached to it. And we can get into that. It's a whole new conversation. But as far as the actual payout, how are the insurance companies paying it out? Reimbursement, indemnity, or cash indemnity? Keep it locked, loaded right here. Standing Insurance.